Hello and welcome to today's lesson. I'm your hard-working but indefatigable teacher, Mr. Burton. You will need to watch this video and take notes as you go. You may need to watch certain parts of the video a few times to ensure complete understanding. This is your homework and I will check your notes tomorrow before we get started. I hope you learned something.
Okay, hello and welcome to today's lesson. Today we are looking at GST, Goods and Service Tax, and how it relates to the General Ledger. Right, today we are looking at the nature of GST and being able to explain that, make the relevant GST calculations, and we're going to calculate the amount payable to the tax department or the amount that you get refunded from the tax department. Goods and Services Tax. GST is a tax on all spending.
An introduction to business. Registering for GST. When you start out in business, you may need to register for Goods and Services Tax, GST. In this video, we'll give you a quick overview of what you need to know. GST is a tax added to the sales price of most goods and services sold in New Zealand. In most cases, GST is charged on imported goods and services. If you're registered, you collect GST from your customers and pay it to Inland Revenue. You can claim a credit for the GST you pay on most of your business expenses. In general, GST is charged at a rate of 15%. So, when do you need to register for GST? You must register if your turnover for the last 12 months was more than $60,000, or if you expect your turnover for the next 12 months to exceed $60,000. You must also be registered if GST is included in the prices you charge, such as being a taxi driver where the meter applies GST. If your turnover is $60,000 or less, you may like to register for GST voluntarily. But before you decide, please give it some thought. Registering has both advantages and disadvantages. By filing regular GST returns, you'll get regular insights into how your business is doing, and you'll be able to claim the GST you pay on most of your expenses. But registering for GST has some disadvantages too. Filing GST returns means extra paperwork, and you may be charged penalties if returns and payments are late. Because you'll be collecting GST from your customers and paying it to Inland Revenue, you'll need to allow for GST of 15% when you set your prices. When you register online, we'll ask you which accounting basis you'd like to use. Your accounting basis determines when you have to pay Inland Revenue the GST on your sales and when you can claim the GST on your expenses. The most commonly used accounting bases are the invoice basis and payments basis. With the invoice basis, you return the GST on your sales when you issue an invoice or receive a payment, whichever comes first. You claim the GST on your expenses when you receive an invoice or make a payment, again, whichever comes first. With the payments basis, you return or claim GST when a payment is made or received. You can only use the payments basis if your turnover has not exceeded $2 million for a 12-month period. Most small businesses use the payments basis. You also need to decide how often to file your GST returns. You can file monthly, 2-monthly, or 6-monthly. Monthly returns might be a good choice if you're likely to get regular GST refunds. However, you'll have to file 12 returns a year. Large businesses with a turnover of more than $24 million must file monthly returns. 2-monthly return filing is the standard option, and you may find filing 2-monthly helps you keep on top of your paperwork. If you have a turnover of $500,000 or less, you may choose 6 monthly returns. You'll only have to file 2 returns a year, but you may find it a big job accounting for 6 months worth of trading all in one go. You can change to a frequency you qualify for at any time. Just send us a secure email through MyIR. Please make sure you file your returns and pay any GST by the due date. Filing or paying late could mean you're charged penalties and interest. Our website is full of useful information and tools to help you with your GST, including our interactive tool for business. Why not go there now and have a look? Once you are set up with a MyIR account, you can register for GST and file your returns online too. It's quick and secure, and you can do it from anywhere at any time. If you're incorporating a company, you can apply for a company IRD number and register for GST on the company's office website. Go to business.govt.nz to access further tools and resources for starting in business.
Okay, that was an introduction to GST in New Zealand. Let's have a look at businesses and GST. Now, businesses will collect GST from their customers for the tax department on all the goods and services that they sell. This is called GST collected. Now, when a business collects GST from their customers, they have a liability on their hands. The GST doesn't belong to the business, and it's owed to the tax department. It must be passed to the Inland Revenue Department, IRD. So a cup of coffee, retail price of $4. GST in New Zealand is 15%. So the cafe keeps $3.40, and they're going to need to pay the IRD 60 cents. Now, businesses pay GST to their suppliers when they buy items, and this is called GST paid. And when a business pays GST to its suppliers, the liability to the IRD is going to decrease. The GST will be passed on to the IRD by the supplier. So fruit and vegetables bought by the cafe, retail price equals $400, and that's going to include a GST component of $60. And the supplier is going to pay that GST owed to the cafe, to the government. So the government now owes the cafe $60 because everything that the business spends with suppliers is going to be, the GST on that is going to be refunded. So that goes for everything, the suppliers, electricity bills, transport costs, etc., etc., etc. So let's say the cafe owes the government $2,550 in GST returns. Instead of the government owing the cafe $60, what's going to happen is that that amount is deducted from the GST owed by the company, and that amount's going to be reduced by $60. So now, with that purchase from the suppliers with the $60 GST included, the cafe has a reduction in its GST liability. It only has $1,990 now to pay to the tax department. GST liabilities. Businesses take away the GST paid to suppliers from the GST collected from customers. So GST collected by the business is from the products they've been selling to customers, and they subtract the GST paid, and these are from products, the goods and services purchased from their suppliers, which will lead to the GST payable or receivable amount. And if it's payable, it's going to be a tax liability to the business because the business owes that money to the tax department. Right, in New Zealand GST is 15%, and we need to be able to calculate the GST component. So we need to be able to calculate the price before adding on GST, and that's called GST exclusive. And we need to be able to calculate the price after adding on GST, which is called GST inclusive. So to go from GST exclusive to GST inclusive, we multiply by 1.15, that 0.15 being the percentage of GST. So something that is going to be priced $200 without GST, how much does the business need to then charge it for a GST inclusive price? They need to multiply that by 1.15. So the selling price there would be $230 with GST included in the price. And it's highly unusual for firms in New Zealand, businesses in New Zealand, to be pricing their products without including GST in the price. Okay, now we're going to go to get the GST inclusive to GST exclusive. 1.15 is the magical figure, but this time we divide by that amount. So if $230 is the amount with GST, the GST exclusive amount, $230 divided by 1.15. So $200 without GST. And to calculate GST from an exclusive figure, we just multiply by 0.15. So without GST, what's the GST component of $200? We just 200 times 0.15, and that's $30. Right, your turn to do some calculations. So pause, go calculate, pause again, and then do the next calculation. So these are prices without GST. What is the business going to be charging? What's the selling price going to be? Right, so remember, 1.15 is a magical figure. Are we going to multiply? Are we going to divide? Well, we know the price without GST is going to be lower than the selling price, so obviously we have to multiply those amounts by 1.15. Right, 6 questions. Go through and calculate without cheating, without fast forwarding. Do your 6 calculations and we'll come back and check them. Ready? Pause the video. Do your calculations. There we go. $100 turns into $115, $1,200 into $1,380, $16 into $18.40, and so on and so on and so on. We're just multiplying that GST exclusive price by 1.15 to get the selling price, or the GST inclusive. Let's have a look at another series of questions. This time we're going for the exclusive price. How much is the price before GST has been added onto it? So we've got our selling prices here, 190, 1200, 16, 650 and 360. We want the GST exclusive price, so the price before GST has been added. That's got to be a smaller number, so we're going to divide now by 1.15. Pause the video, do your 6 calculations, come back and check. Okay, pause. And the answers, dividing these by 1.15, we have $86.96 right down to $3.13 and 4 cents. And that's done by dividing that selling price by the magical figure of 1.15.